Hey guys, so today let's talk about a topic that is very important and that very few people realize exists. And it's something that impacts us all, and it's basically fractional reserve banking. You may not realize this, but regardless of what you think the government is issuing as the inflation rate for bonds and therefore for the entire economy, beyond what you think the government can do with the money printer and basically stimulating the economy with a deficit and basically funds that it hasn't acquired through productivity, the reality is that there is a bigger issue that exists for a long while now. And that issue is driven by the existence of credit. So let me give you an example. In the past, it used to be that if I had some gold that I basically got compensated with for my work or for some product or for something of value that I produced today in the economy, that gold I could have gone to my bank, deposit that gold, and basically get a ticket which tells me, hey, you have one gold coin stored in the bank. Now, we all know that the business for banks is to lend money. And basically, yes, that gold coin that I gave them is supposed to be stored there, but they gave me a ticket, basically an IOU. That gold coin in reality is being circulated to anyone that is wanting to borrow and that hasn't produced anything of value in the present time in the economy, has not basically earned that gold coin. What basically that person is doing is just taking risk, is asking the bank, hey, I want to purchase this car, this house, this asset, or this thing that I need. I don't have the money that is worth, in this case, let's assume that a house is worth a gold coin. So why don't you lend me that coin that you have over there for me to buy the house? I will pay you with interest over time. Yes, that's perfectly fine, but that's over time. That's a bet that the bank is doing, basically taking some risk on this person that over time is supposed to pay back with interest. Now, so far, everything seems like it's balanced out and nobody is getting ripped off. The problem is that you need to understand two things. One, since 2020, you will assume that for the system to work, there should be some decent percentage of reserves of all the deposits that the bank has concentrated or acquired for it to be able to both serve the depositors and any request for them to use their money, and also to be able to lend some money. So before I tell you what percentage it is today, just think of a number. I asked my mom, she said, well, maybe 80%, maybe 50%. Okay, what do you think it is? Since 2020, that percentage is 0%. So it means that if you give the bank $1,000, $100, it doesn't matter how much money you give them, they have the right to lend out 100% of those funds. To whom? To anyone else. So who's basically backing those funds that are not in the bank's possession? The government. And basically they have this insurance, the FDIC insurance that covers up to $250,000. But think about it again when it comes down to the system itself. It means that 100% of what you produced and earned today can be lent to someone that has not lifted a finger and basically is taking some risk and is giving the bank a promise that they will pay over time. So it means that really the bank doesn't have your money. It means that the bank is taking a lot of risk. It means that the governments are there to bail out the bank if the bank's risks don't pay off. And that's point number one. But the second effect of all this is if I work my ass off to get those $1,000 or that one gold coin or whatever I'm depositing on the bank, then someone else that hasn't worked, that hasn't produced that value worth one gold coin or $1,000 or whatever I deposited there, takes that money out through a loan, through credit, basically, which is the fractional reserve banking system that we're on right now. It means that now, if both the borrower and me are competing for the same house, I see in my bank account that I have $1,000. He already got approved a $1,000 loan as well, that it's as good as actually generated money that I produced. So we're both competing for the same house that, let's say, was priced at one gold coin or $1,000 or whatever amount of money. So if both the borrower and the actual worker are competing with future money and present money, but at the eyes of the seller of the house is the same kind of money, if we're both competing for the same house, what is the seller going to do with the price of that house? There are only a limited amount of houses, limited amount of cars, limited amount of productivity that a country has on a yearly basis. That is the GDP. So yes, there can be a marginal increase or decrease on a yearly basis, but for the most part, it remains the same. So if you now have in the system, let alone the money printer, let alone the official inflation rate, just by virtue of credit being there in the system, you are now competing with future money and present money for present assets. So the price of those assets just increase. If I'm the seller and I have two people competing for my house and both are offering the same, I will raise the price of my house to see who's willing to pay that and who's wanting that asset that badly, basically. So hopefully I haven't confused you too much. This is just to illustrate how the whole game about let's fix the deficit, let's cut the rates, let's see what happens with the money printer, let's see what happens with war. It's just a story that they're telling you to let you believe that this has a fix. Unfortunately, it doesn't have a fix unless we move to a system that distinguishes what's actual, hard-earned, real-time money that has been produced and has been earned and has been deposited in a bank account versus future money that you haven't produced yet, that someone is taking a risk to give you today, and that person, in this case the bank, is held accountable for you not paying or for that risk not paying off. Today, that doesn't exist. The banks keep getting bailed out by the government. The governments keep bailing the banks out by printing more money. So it's just a cycle that is going to continue no matter how much cuts we have. I truly believe that we need to move to a system that is back to hard money. I know that you know this is Bitcoin. In my case, it's my thesis and my recommendation. You should know that there are a lot of initiatives in the government like the strategic Bitcoin reserve that is at least paving the way for that to be a possibility. But until then, just be aware that wars, inflation, prices rising are going to keep being the norm because the system in which we live in is designed to do that. Again, please, if you have some questions, send them my way. I'm happy to explain in some other examples or illustrations. But if you want to hear more of this kind of content, please like and subscribe. I will keep sharing some more and talk more about Bitcoin and the promise that it has for the future. Until then, see ya.